The first phase of this course is understanding the gold market. The symbol for the gold market is popularly known as XAUUSD. And that means you are trading gold against United States dollars. That doesn't mean you cannot trade gold against other currency. Of course, you can trade XAU against New Zealand dollars, Canadian dollars, euro, or any other currency. But in this video, we'll be looking more at trading XAU against United States dollars, because that is what I do. The first thing you need to understand is war news. Whenever there is a news that is more like a war, like an international war, it is more likely to affect the gold market to go bullish. So whenever there's a war news, gold markets go buy for buy. The second thing you need to understand about gold market is the volatility. The gold market is very volatile compared to any other currency pair, because what a 0.01 lot size is going to give you on gold is way higher than what a 0.01 lot size is going to give you on any other currency pair. So you need to make sure that whenever you are trading, you check the volatility of the market. The third thing we're going to be understanding about the gold market is it is essential to use stop loss, because sometimes the market may never come back to your position. So to be at the safer side, you need to properly manage your risks. So that is why you are more advised to use stop loss. Now, the fourth thing we need to understand about the gold market is we are trading against the United States dollars. So high impact news affects gold markets, especially the NFP, CPI, FOMC, and the rest. So how do you know if there's going to be a news for United States dollars? What you want to do is go to your browser and search for forexfactory.com. Basically, you're going to be going right here to check for USD. And whenever there's a red file, it shows that it is a very high impact news. And when it shows orange, it is a high impact news, but not as high as the red. And if it shows yellow, it is a news. It is a high impact, but not as the orange or the red. Basically, these are the major things you need to understand about the gold market. The next thing we're going to be looking at is technical analysis. Under this technical analysis, we're going to be understanding the support and resistance. We're going to be understanding the liquidity. We're going to be understanding the break-off structure. We're going to be understanding the key points. And now we'll go ahead and pinch in my screen to mark out your support and resistance. The beautiful part about my support and resistance is that it is not the same way other people will teach you how to draw your support and resistance. This is a method you can never see on YouTube videos or not even in any ebook. So make sure you pay more attention. Basically, if you need a support level and a resistance level, it is mainly for you to trade your current day. So you want to see the support and resistance of the previous day so that you can know your key points for the current day. Now, under the support and resistance, we're going to be understanding liquidity. So what does liquidity means? Whenever you have a candle, like this bearish candle we have right here. Now, if you check out from that candle properly, you can see that we have a line at the top, and we also have a line at the bottom. Now, all these lines are basically called the wick, W-I-C-K, and these are the liquidity being created. Logically, what we understand in the forex market or in any trading platform using this bars is that the market is definitely going to come to take either the bottom liquidity or the top liquidity. Now, since we know that, then those points are going to be our support and resistance level. Now that you've understand what a liquidity means, that is where you're going to be drawing out as your support and resistance. So we want to look for the support and resistance for 29th of April so that we can trade for 30th of April. Now I'll just go ahead and check where 29th of April started from, and it was at this Asian point right here. So it started all from this bearish candle. Now, what you're going to do carefully is you want to check out the top of this wick. As you can see, there's a candle that I've crossed above that top. So we don't need the line. That cannot be either our support or resistance. The next one we're going to be looking at is the bottom. So we draw the line at the bottom. As you can see, we have no any other candle that I've crossed along that line. So definitely that's a very verified and valid support level. So we'll move next to the next candle. We check for the top. It has been crossed, so we don't need that. We check for the bottom as well. It has been crossed, so we don't need that. So we'll move to the next candle. We also check the top. We don't need that. It has been crossed. We check for the bottom. We don't need that. It has been crossed. We check for the next one from the top. It has been crossed. We don't need that. We check at the bottom. It has not been crossed. So that's going to be another beautiful support level. Then we move to the next candle. We check at the top. It has not been crossed. Definitely, we need that level. So we check the bottom. It has been crossed. So we don't need that level. All right. So we delete. Now we move to the last candle. We check the top. We have no any other candle. Then we're going to go directly from the bottom as well. Now, as you can see, this is going to be a support and resistance level. And I logically call this the key points because these are where we're going to be putting our eyes very close to have a beautiful trade. Now, before we move further to what else we're going to be doing, you have to go directly and make sure that you change your time frame to 5 minutes time frame. Now that you've changed it to 5 minutes time frame, before we go for 30th, that is the current day trade, we're going to be understanding what a break of structure means. Now, for you to know what a break of structure means, I'll just go ahead and zoom out this chart we have right here. So look at the charts we have right here. This bottom right here is a structure. Now, as you can see, we have the market go all the way down to break it down and have another structure. So logically, we call this a break of structure. So now that you've understood what a break of structure means, let's move straight and see what's going to happen in the next day. So I'll just make sure that I'm a 5 minutes time frame and I'm seeing my key points properly. Now, zooming out this key point, we want to see this charts. We want to see this candle cross either below or cross above. If it cross above any of your key points, it is definitely going for a buy. And if it cross below any of your key points, it is definitely going for a sell. So let's go ahead and see what will happen in the next day so that we can know either we're going for a buy or a sell. Now, as you can see, we have crossed below. So logically, you need to know and understand that we are going for a sell. But that's not now, because we need to make sure that we wait for the London session, because London session is the main time we're going to be trading. So I'll still go ahead and check what happened throughout the Asian session. Just make sure you're patient. Let's wait to have the UK session. Now, one of those things you need to understand when you're trading is to choose what session you want to trade. Now, as you can see on this particular trade, This is the Asian section, and you can see it has broken all those lines, and it's all go for a sell. Now keep checking out, it is respecting those lines. Now that we have our UK section, the UK section got to open at this point. I told you what I do basically is trade UK section. Now, this UK section has crossed below our line, our key point, and it has broken the particular structure that we have right here. So immediately we confirm the momentum, we are definitely going for a short. Now that we understand that we're going for a short from this level, the next question is, how do we consider our stop loss? Now, for you to consider a stop loss, you need to check in properly your key points. Your key points are still going to be where you're going to be considering as your stop loss. Now, if you check out for this properly, the next key point we have closest to that was this key point right here. So we're going to target that point to be our stop loss. Now, let's see to have a 1 to 2 risk to reward. And now that we have a 1 to 2 risk to reward, let's go and see what's happened throughout the UK session. If you check properly, you could see that it kept respecting this level to be the new resistance level. So let's see what's going to happen to this trade. So, beautiful. At the end of the day, if you check properly, we are very close to our take profit, okay? So, let's check properly. Now, can you see we have our take profit? So, what I do basically is I trade during the UK session, all right? So, if you know that your time zone permits you to trade properly during the Asian section, because from my own time zone, during the Asian section, that is 1 a.m. So I'm going to be asleep at that time. So what I do basically is I trade during the London session. So you can choose either to trade it during the Asian session, or to trade it during the UK section, or to trade it during the London US session. All right. So what I'm going to do is I'm going to go right there and backtest one more day so that you can understand that this works perfectly. Okay, before I do that, I would like to test out for the Asian section so that you can also see that this works properly. Now remember, this was the Asian session, and we are waiting as the Asian session gets started. We are waiting for the market to break either above this line or below this line. So as you can see, it has broken the structure that we have right here. So immediately we have it broken down, we should definitely know that we're going to be going for a short. So we're just going to go ahead and go for a short from this level, considering the next key point as our stop loss, and always targeting 1 to 2 risk to reward. And as you can see, we hit that during the Asian session. So this is one of the very beautiful calls that you could see out there, because it is based more on gold, and it is a tested and trusted strategy. So make sure that you understand this concept properly. All right. So whenever you have key points and the market is ranging around and refuses to break your key point, do not go for a trade. So that is what we need basically for the technical analysis. The next thing we're going to be looking at is the risk management. All right. If you don't know how to calculate gold, I will show you right here on my screen. As we all know, gold is a very volatile market. A 0.01 lot size is going to give you $1 as a profit for 10 pips. So if you use a 0.1, it's going to give you $10 for 10 pips. And if you use a 1 lot standard lot size, it's going to give you $100 for 10 pips. So you need to make sure that you calculate how many pips you are having right there to risk. Okay? What I do basically is I always get prepared for the bad days. So make sure you are not risking more than 10% of your capital when you're trading. In this phase, we don't have to waste much time. What I'm just going to give you is a point that you need. If you're trading an account of $100 or less than $100, your maximum lot size should be 0.01. And if you're trading from $500 to $200, your lot size should be 0.02. Now, if you're trading up to $1,000, your lot size should be a 0.1. And if you're trading above that, you can use the data that I've given to you to calculate your lot size properly. But make sure you're not risking more than 10% of your capital. Now let's move further to the next phase. The next thing we're going to be looking at is trading psychology. You need to make sure that you are disciplined. If you are using a 0.01 lot size, make sure that is what you keep using throughout the trade. Because sometimes if you use a 0.01 and it goes your way, then indiscipline makes you to use 0.02 and it goes against you, that will make you lose a lot. So you make sure that you have discipline and you have consistency. One of the major things I will tell you about discipline is whenever you have your points, make sure you're very sure before you go for a trade. Let me use this Asian section to give you an example. If you look at the Asian section, it started at this point. It looks like it's going to be going all the way up. Now, if you assume that it's going to be going up and you set your stop loss at this level, it's going to go against you. So that is why you don't assume. You need to make sure that you see the momentum before you go for a trade. Now you have to be patient. If you have your trade, make sure you are patient. For me, the best advice I will give you is after having a trade, close your system and wait to either hit a take profit or a stop loss. Now the third thing we're going to be looking at is the emotional control. The emotional control works together with discipline. Now we need to make sure that even if you are in loss, you're still going to wait. Because most times it might be going against you before it later comes to go your way. So inability to control your emotions might make you to, have bad trades. And you need to also make sure that you check for your greed and fear. 1 to 2 weeks reward is very okay. It doesn't matter that you can have up to 1 to 5. Because if you check this Asian section, it gives us up to 1 to 5 risk to reward. And that is mostly to be known as a greed. Because what if it goes against you after hitting your 1 to 2 risk to reward? So you need to make sure that you don't have greed and you're confident about what you're doing, so you don't want fear. So the next phase is the trading style. What style do we use to trade this strategy? Basically, it is a scalping. But sometimes the market might hold you for an intraday trading. Because sometimes you might have a trade, but less volatility in the markets can make your trade keep running until the next day. So it is a scalping, but it can actually lead to intraday due to some conditions. Now, the last part of this course, since you've understand how to set your stop loss, you've understand how to set your take profit, you've understand the strategy to use, and you also understand what you should be careful about, the psychology, the risk management, technical analysis of the gold market. The last thing we want to talk about is knowing who you are. Some people are going to have good trade if they are providing signals, and immediately they have their own live accounts, their signals is going to start going bad. And some people are very good to trade their personal live account. And if they choose to give you a signal, the signal is going to go bad. And some people are not good in trading the personal account. They are not good in giving signals, but they can manage accounts. So if you're using this strategy, you need to make sure you know who you are. Do you want to trade with your real capital, with your live account, or you want to provide a signal? As for me, I trade with my real account and I provide a signal. As we reach the end of the course, I hope you understand all what you have at the end of this course. And I hope you make a lot more profits on this course. Make sure you give a review after you've used this strategy. Come right to my email and tell me things you observe or things you want me to talk much about. So make sure you use the email right on the screen to get in touch with me. See you guys on my DM. Thank you.